Good morning, everyone. It's JJ from the tradingsyndicate.org. I hope you've had a great Saturday and you're having a good weekend. I haven't done a weekend update in a little while, so let's go and take a quick look at what transpired on Friday and how you can train yourself how to react and trade the follow through of this move, whatever it may be. Now, we had, of course, a news event, and anyone who got caught short underneath 64.28. And why am I using 28? Well, I'm just using the top of this profile. And those 3 days, anyone who's been shorting that market in those 3 days, it was a sort of a liquidation and a balance. And then very quickly, once we started taking out these highs, got a lot of people trapped short underneath that 64.28. But even more so, we have a phenomena that market profile is beautiful for, and it's called single prints with just a half hour period trades in one area. So what it does is the stats, people like to say there are two distributions, one below, one above, and these single prints are full of buy orders from short sellers who are trapped. Okay, and it's a large short position from 64.28 up to that 64.70 level. That's a large short position. Now it was Friday. Not a lot of people are around. Maybe there weren't as many people around to sell, but there certainly were not enough sellers to keep price lower. There was no selling competition. Once you folks understand that it's selling competition that keeps price lower, it really helps you understand once you lose those sellers, right? When you notice those offers starting to lift, right? Market's starting to jump, the offer jumping, watch that offer jump. It's practical information you can use. You don't need expensive software. You don't need any sort of, you know, snake oil order flow software. All you need to do is be able to watch the offer. People have been watching the offer for centuries. Guess what? It works, right? When the offer starts moving, it up means the selling software that they have now. In the old days, the sellers would see buyers coming in, just like tourists coming in off a bus, multiple buses full of tourists. You raise the price of stuff you sell at the beach, right? It's just simple commerce, right? So, how do we trade this on Sunday night? Well, we've got the infamous P profile, right, which indicates short covering. All right. We will look the base of that P, which we're going to go look at on the next chart, will give us an idea of the downside. We closed 84 and 3/4. So we're going to look at a couple of scenarios up and down. How do we do that? We are going to use market profile. Now, if you don't have market profile, don't worry. Okay. Market profile is just a very, very, very swanky half hour candle chart. Okay. So you could use a half hour candle start chart. You put in where the stops are at the top of every half hour candle, the lower stops at the low, right? And if you see, the thing is, if you pull out the chart like this, you'll see that low of that half hour candle, right? And the high of that half hour candle, those are what we call the single prints. That's where all those people got caught short when we started taking out previous day highs. So let's go look at that level. That's 64.71 and a half. Okay, that's where the base of everyone who's caught short. Now, that was early in the day, right? That was 10 o'clock Eastern. That level got retested later on in G period, and then later on in that last half hour of trade before the 4 p.m. close. Notice that the M low could not take out the G low. So I would say the fresh meat short position, the fresher shorts are trapped under 74. I would use that. Say if you're shorting this market on the open, or if you see weakness, if you see sellers coming out, right? That is an area that you would want to cover at, right? For taking longs, you'd want to go long 74, use the G low as your stop and the C low as your stop if price gets down there and you're looking for a bounce, right? Because all the buy orders are in that little green box. Now, the next lower stop is 64.80. That's so if we open and we move down, these are going to be your natural first structural targets. Okay, if it opens, goes up, can't take out the upper stops at 87, and it turns, right? When a market can't take that upper stop, it means there's multiple people selling into that level, right? So it's not economically viable to take those stops because you don't have the only supply. There's other sellers. There's no need to spend money to take that stop. If it gets naturally taken just by order flow, then the sellers will lift their offer to the next stop and the next. But that's where the sellers are waiting for buyers. Because when you trigger an upside stop, it creates buy orders. That's where you can sell size into it. So this is how you distribute, and you'd sell down. If it doesn't take that stop, they're going to rotate it down because the sellers will compete. And that's going to be their first sort of target that you would look at if you were a short seller. Now, what if if you see that there is no selling? What if this thing opens? Say maybe it opens here at 84, 85, starts taking out the upper stops, doesn't even have any rotation down. Okay. That's something you got to be aware of in this market because we are close to all-time highs. Use the stops to tell you. If the market opens and starts taking out these stops quickly, don't stand in front of it. Okay? Wait till a seller shows up and you see a look above and a fail because then you see that the sellers will compete, right? Don't ever short the front end of a move. That is a death wish because the market is seeking, right? That is price discovery, right? The front end of any move is price discovery. You don't want to be hooked up to the shark while it drags you 50 nautical miles, right? Let the thing go and come back in. And once you see the sellers emerge and start competing, then you hit it and then you got a place to put your stop, right? It's tactical, it's simple, it's practical. And that's what everything we do at the Trading Syndicate is. So if you want to learn how to trade without any jibber jabber and nonsense and snake oil, we're not going to sell you software or indicators or any of that bunk, right? Let's tell you how to trade. Where do you put your long? Why? What is the business reason for the trade, right? If there's no business reason for the trade, you don't take the trade. There's no such thing as FOMO in business, right? Let us help you make good, solid business decisions based on fact instead of fiction, right? So you can actually make a living instead of running around in circles and blowing up accounts and just having a horrible time of it, right? Learn how to trade with common sense, right? So if we start taking out these upper stops, don't stand in front, right? There's a big stop here at 98.25, and then there's our all-time high, which is up in the 65.03 area. So if by any weird chance it takes off that 65.0304 area, don't stand in front of it. Let it find its top and then do business. Okay. And I'm hoping for, right, a little bit of liquidation so we can try and fill in some of the poor people who got trapped short, especially in these big single prints, right? These Fed moves sometimes are known to be taken back. There's not going to be as many buyers. I'm not trying to convince you to short it off the get-go. Be smart. Let the market open. If you're unsure, watch it trade for an hour. Take it easy. It's Sunday night, right? 6 p.m. Eastern time. And trade that way. Now, according to my 1-minute chart, these balance zones, I read it a balance zone when we moved up. You see, we had the balance and then we moved up, so I redid them. I've got this 63.72 balance, and I'm gonna just leave this as is. Let the market trade for a little while. 11 to midnight, that'll be my time. And then I'll see whether or not um, I can redraw a new balance zone, right? So that's what I'll do. You could even use these areas somewhere as balance, but don't be too eager to interact. Sunday night, maybe let the market open up and kind of find maybe a nice rotation. That could always happen. We have a nice back and forth, and those are always nice to trade and lower risk because you know exactly where your risk should be because the edge of the playground is where your risk is at and where the trade doesn't make any financial sense. Remember, trades are business transactions. Okay, so come to the tradingsyndicate.org. We will teach you and explain to you where you take the trade, why you take the trade, right? We explain the business behind the transaction that you are engaging your capital in so you can change. If the transaction starts going bad, you can get out of it maybe even before your stop gets taken. How about saving some money for a change instead of just throwing it away to all the market makers, right? We teach you how to react to change. That's what trading is. Trading is reacting to change. We train you how to react with common sense and risk management so you're always there for the next trade. All right. That's how you stay alive. That's how you're in this business for a long time. And that's how we teach people to be long term greedy, right? We want to be like those savage old guys that used to own my brokerage firm. Long term greedy, big money. Short term greedy, blown accounts. I'm JJ. I'm hopefully got you at a good time. Hopefully you're having a good weekend. Come visit us at the tradingsyndicate.org. And this September, I'll be starting a new coaching class. I offer lifetime one-on-one coaching. That's lifetime unlimited one-on-ones. And we work together until you're profitable and consistent and beyond. So when the market changes, I'm around to teach you how to adapt to it and how to react to it. So you're always maximizing profit, minimizing risk, and not losing too much hair trying to do so, right? Simple, practical knowledge. Thanks for listening, folks. We are on YouTube at 7:30 in the morning UK time and 9 a.m. Eastern time, half hour before the New York Open. And that's Vwaptrader1 on YouTube. And we are at the tradingsyndicate.org. Please come join us. We'll help you pass those evaluations. Thank you so much for being with me. Have a wonderful and safe weekend and enjoy the summer. Bye for now.